Hello, everyone. So today you have joined with me for seminar number 2. So far in seminar number 1, we discussed about the introduction to management accounting, introduction to cost accounting, and then we discussed a question from marginal and absorption costing. Then we discussed a question as well as some theory from stock control. Okay. So now in seminar number 2, what I'm going to do is there are some remaining questions from stock control. So I will first discuss those parts, uh, which will be coming to examination, as well as you need more knowledge on these areas. Therefore, I will discuss that part, and then I will move on with the other remaining lessons from our subject. Right. So in our seminar 1, we did a little bit on stock controls, where we discussed what stocks are, what stock control is, and what are the techniques that we can use for stock control. And when talking about those stock control techniques, we discussed about stock levels and how to compute different stock levels. Now, today we will discuss about another concept, economic order quantity, which comes under stock controls lesson. So first bit, we will talk about the remaining part of the stock control, and then we will continue with the other lessons. Right. So when we are considering about total inventory costs, we have purchasing costs, right? So whatever we are paying upfront for the inventory that we bought. Then we have to add any holding costs. See, these types of costs, if they are given, we need to add those costs. Sorry, holding costs are here, okay? These holding costs. And next, you need to add ordering costs, costs that are included here, right? So the summation of purchasing cost, holding cost, and ordering cost will be total inventory cost, right? Remember this equation. Okay, now we talked about total inventory cost. Next, let's discuss economic ordering quantity. Or we say economic order quantity, EOQ. So this answer the question, how much to order, right? How much? That means the amount, the quantity that you need to order. You need to do calculations to find how much you need to order, right? Or else, if you are vaguely ordering stuff, sometimes that might not be enough. Sometimes there might be too much. Therefore, you need to do computations and find out how much you need to order. If you are making few orders in a year, for each order, how much you should order. Likewise, these things you have to decide in inventory or stock control. So before moving forward, for you to calculate this, quantity that you need to order using economic order quantity or EOQ, remember that they assume these things. Without these assumptions, the equation we cannot use. First one, instantaneous production. That means constant production, okay? Or constant production. Then immediate delivery. Once you produce, you immediately deliver it. Next, deterministic demand. They can determine the demand correctly. Constant demand. So once the demand is determined, it will be very similar over years, over months, or whatever you are doing the computations for. Then constant setup cost won't change, and the products will be independent. So these 6 assumptions are there for us to enable EOQ calculations. So now we will discuss there are three methods that we can use to calculate the EOQ. Okay. One is tabular determination. We will do an exercise from that, then you will understand properly. Then graphic presentation. Graphically, how we are going to find EOQ. Then graphically, we can show EOQ. Lastly, algebraic method where we can use an equation. I will explain that. Right? Okay, now let's go to our questions. I might have shared this with y'all. So open the question tube. Let me also open the question tube. Okay. So here, first two questions we did for stock control levels. Now let's do calculations to find EOQ. First, we will use the tabular determination method. Read the question now. Following information are related to a material A, monthly usage 250 units, cost of placing and receiving one order is 60 rupees, cost of materials per unit is 10, carrying cost 10% of inventory value, find EOQ using tabular method. Okay, now take a pen and paper and then we'll do this with me. I will open an Excel sheet, then it will be easy for me to explain this to you all. Let me open it. So for the easiness, what I have done is I actually prepared the structure previously. If not, it will take more time for us to for me to type these things. Okay, so let me open this Excel. Okay. So for the convenience, I actually copy pasted the question here. There no need to go back and forth of these tunes, right? Then this is the structure that you need, okay? Now in the question, it is given monthly usage is 250, right? But for a company, we are preparing the COQ annual level, right? Therefore, if the monthly usage is 250, what will be the annual usage? 250 times 12. That will be 3000. Okay. So for all the orders, number of orders, let's take 1, 2, 3, 4, 5, 6 orders. So all these orders, you will be ordering annually 3000 units. Right? Is it clear? No. Order size. What is the order size? If annually you are making one order per year, how much you should order for an order to meet the annual requirement of 3000 units? That means you need to divide the annual requirement by number of orders, right? Divide the annual requirement by number of orders, right? Let's take the second one. If we are doing 2 orders per year, if you are making 2 orders per year, and your annual requirement is 3000 units, per one order, how much you should order? How much units you should have? The order side. Take annual requirement divided by number of units. Likewise, do this for take your calculator and finish annual requirement divided by how many orders? 3. Therefore, per one order, you need to order 1000 units. Do these 3. Okay. So did you do this? Now 3000 divided by 4, right? So how many units per order? 750. 3000, number of orders 5. Then per order you can order 600 units. Again 3000, number of units 6. Per order you can order 500 units. Okay. Now ordering cost, what do they say in the question? They say ordering per one order they have to incur 60, right? 60 rupees per one order. This is the ordering cost, okay? There are no other factors given. We discussed few factors which can come under ordering cost and carrying cost, right? So now we are talking about ordering cost. So now they are directly giving us for placing and receiving one order 60. That means the total ordering cost. Here, 60 per one order. Then how many orders in our first scenario? One, or therefore, 1 into 60 will be 60. Next, again, 60 times 2, right? We are making 2 orders. So per order 60, per 2 orders 120. Third one, 3 orders. Then 60, 4 orders. 60, how many orders? 5 orders. 60 into 6 orders. So this is the ordering cost. So per order, you are incurring 60 rupees. Is it clear? I hope it's clear. Then next, average stock units. Now we need to know average, how much units will be there. 50% of the order placed. Now they say, now we are ordering this amount of units. So 50% of this ordered units will be the average number of units. So first scenario, we are ordering 3000, right? So 50% of that, how much? Into 50% will give you 1500. Then again, in our second scenario, we have 1500 per order. 50% of this, 750. Again, we have 1000 units. 50% of this, 500 units. Likewise, find the average stocks per the order size. Find this by yourselves. Okay. Next, what do we need to find? We need to find the carrying cost. They say carrying cost is 10% at 10 per unit. Now we are finding this average stock. Why do we find this average stock? To help in computation of the carrying cost. Okay. So now we have the average stock. Okay. Now that means Q divided by 2. We got the 50% no. Q means the order size. Then we divided it by 2, or we found the 50% of it. We have this bit of the equation, Q divided by 2. Now, what is this holding cost? They say carrying cost of inventory, carrying cost 10% of the inventory value, which is equal to, so 10% into 10 rupees, right? Because 10% at 10 rupees per unit. 10 rupees per unit. So out of that, the carrying cost will be 10%. So if we are taking 10% of 10 rupees, that will be 1 rupee. So CH will be 1 rupee per unit. Is it clear? So we found CH is 1 rupee. Now average stocks, of course, we found it here. Now let's multiply these two. So 1 rupee into 1500 will be 1500. Then 750 into 1 rupee will be 750. It won't change since the holding cost per unit is 1 rupee. Okay. If it is 2 rupees, then you need to multiply this average stock by 2. 375. 300 into 1 is 300. Then we have 250. Now let's find the purchasing cost. So what did we say as the purchasing cost? Purchasing cost? They say per unit, they are paying 10 rupees. Okay. Per unit, they are paying 10 rupees. So the annual requirement is 3,000. So that means, okay, sorry. Annual requirement is 3,000, right? So purchasing cost will be 3,000, sorry, 3,000 into 10, right? It won't change because each year we are ordering 3,000 units. Unit price per unit we are paying 10 rupees. Clear? Then total cost. So in the tune we learned, right? What is total cost? Purchasing cost plus we need to add purchasing cost. Plus, then let's find out ordering cost. Ordering cost plus holding or carrying cost. The summation of these three will be the total cost. Okay, now let's find out the total cost. Take the summation. 30,000 plus 1,500 plus 60. That will be 31,560. Please add these three manually. I will, since I'm using Excel, I will just take the values. Check whether you got the correct answers here. See that whether you got the correct answers. Okay, now you found the total cost. So this is why to calculate the EOQ in tabular method only, we need this total cost, right? Now, remember when at the level where carrying cost and ordering costs are equal. If the carrying cost and ordering costs are equal, we consider that order size as the economic order quantity. This is the order size. So EOQ levels. These are EOQ levels. Right? Now we need to find economic order quantity level where carrying cost and ordering costs are equal. Now check all the columns. 240, 375, 300, 300. So what is this? This will be the economic order quantity here, right? In tabular method, remember when the ordering cost and carrying costs are equal, that order size will be the EOQ, economic order quantity. So the answer is 600. Clear? Please copy this, copy the answer. Then we'll go back to our tute. Right. Now we did the tabular determination of EOQ. Remember that structure. This is the graphical presentation. I will not discuss much about this. So let me share this screen. So I hope you all can see this. And let's take this as well to this side. So I'm sharing the Excel that we prepared just now with the graph. Okay. So now here, see, we have ordering costs 60, 120, likewise. So you just have to mark these in different levels. Then what do we have? Holding cost 1500, 750 likewise. So it will go up like this. Okay. If you mark these values, it will go up like this. So the place where these two becomes equal, that is why we found ordering cost and holding cost equal order size. Okay. We assume that when the holding cost and the ordering costs are equal, that will be our optimal order EOQ. That is basically why we got the value order size where the ordering cost and the carrying costs are equal, right? This point. Okay. Let me share the tute. Okay, so this is the graphical presentation. Now let's go to the algebraic method. So in the algebraic method, we use this equation where 2 multiplied by demand multiplied by ordering cost or the setup cost should be divided by the cost of holding 1 unit of inventory. So you need to take the square root of this thing, whole equation, substitute the values and then find the square root. So remember, you need to remember this equation and it's a must. This will be tested in the examination as well. So you need to remember this equation. Now let's go to our tute and do the questions. Go to your question tube. Right. Now tabular determination we did. Then next, algebraic method of EOQ. Right? So there are a few more questions in this tier. So I will cover those in the seminar. Okay. If not, we won't have time to do all these things during the lecture hours. I will do one question from each method. So you will understand basically what we are supposed to do there and what equations we are supposed to use. Then during the seminars, I will do all the other questions and maybe for homework also you can give it a try. Okay. If I don't do the same questions in the seminar, so try to do those, okay? With the knowledge that you have gained, you can do other questions. So let's do the first question here. Calculate the economic order quantity from the following information. Also state the number of orders to be placed in a year. We are supposed to calculate the EOQ and number of orders. Let's go back to our Excel sheet. Okay. So here also I copy pasted the question here for my convenience because it's hard to go back and forth when we are using the computer, right? Now let's find out the EOQ, right? First we will take this equation. So let's multiply 2 times. Demand is how much? Consumption of materials per annum. So remember, they have given the annual demand 10,000. Right? Then we need cost of ordering. So ordering cost is how much? How much? 100 rupees. Let's multiply again by 100 and then close the brackets. Okay. Now we need to get the holding cost per inventories, right? Per unit. We are supposed to find that. So in the question, it's given 8% on the inventory value. So per kilogram of raw material, it will be 4 rupees. Therefore, 4 rupees into 8%. We don't take the total inventory value, okay? We are just taking the value of a unit of raw material. That will be 0.32. Therefore, let's divide this by 0.32. I forgot to put the... I will just keep this as it is so you can refer it. It's very easy. Right. So what will be the answer? 6,250,000. But we are supposed to find the square root, okay? Don't forget that. To find the EOQ, we are supposed to find the square root. So in Excel, we can use this. That will be 2,500. So if you are using the calculator, use the function square root, okay? Type the square root function and then type this value there and press enter. Then you will get the amount of EOQ or economic order quantity. Right? Okay. So now we found the economic order quantity as 2,500. So you are supposed to remember this equation. Okay. So you will have the values. You just have to substitute these values to the equation and find out the economic order quantity. Right? Now let's go back to our tute. So now we did questions using the algebraic method to find economic order quantity. Then next techniques that we are going to discuss, I will discuss more theoretical side. Okay. So first one, ABC analysis. Classifying inventory according to some measure of importance and allocating control efforts accordingly. Now, here we are seeing whether these inventory are important. The levels of importance. We are taking very important, moderately important, and least important. The materials that are very important, we classify under A. Then the materials that are moderately important, we classify under B. Materials which are materials or inventory which are least important, we categorize under C. So the materials which are are categorized under A. Oh, very important level have high value. Their value is very high, but the percentage of items that we are using maybe in the production or sales will be lower. Okay. In moderately important inventory, the value is also moderate. At the same time, percentage of items that we use will be moderate as well. In C, least important inventory, the value of the items will be low, but the amount, the percentage of items that we use will be very high. That is JIT, just in time. JIT is a philosophy that advocates the lowest possible levels of inventory. JIT espouses that firms need only keep inventory in the right quantity at the right time with the right quality. Remember, in just in time, the basic thing you need to know is you need to keep the right quantity at the right time with the right quality. These three things should be there. The ideal for JIT is one, even though one hears lot size the term zero inventory used, right? There can be zero inventory actually. Right time you are getting the order. So you don't need to hold inventory. You are using it for production. Right quantity is there. So you won't have any leftovers. Right quality will be there. So the obsolete inventory, likewise, all these things can be avoided. Next one, VED analysis. According to this analysis, inventory items are grouped into vital, essential, and desirable. Just read this slide. Read what this vital and essential and desirable items are. What are the things that you need to consider if you are categorizing inventories under VED analysis? Okay. So V means vital, which means very important, right? Items constitute such items of inventory whose inadequate supply may substantially damage the productive activities. Essential means, yes, they are required, right? Items are there items whose non-availability cannot be tolerated for few hours or one day and the cost of production loss is high. So that is also important, right? Desirable means items do not have any immediate impact on production. Hence, these may or may not be maintained. This might not have any impact on the production, but vital and essential items have an impact, right? SDE analysis. S means scarce, D means difficult, E means easy. Scarce items are those items which are in short of supply. So you all know this, right? Scarcity, all these things we have learned. So these items are short on supply. Mostly such items constitute important items, very important items, but they are scarce, right? Difficult items refer to such items which cannot be procured easily. It might not be scarce, but it's hard to get those. Procured means it's hard to buy those to your company. It's hard to find those. Then easy. Easy items are the items which are easily available in the market. They are easily available in the market. Next one. FSN analysis. Fast moving items are stored in large quantities and a close watch on the movement of such item is kept. So these are fastly moving, fastly used in the production and they are stored in large quantities. Slow moving items are not frequently required by the production department, but they are required, okay, not frequently required like fast moving items. Next, non-moving items. Non-moving items are rarely required by the production department, okay? Right, so that is the end of this tutorial. So we discussed what did we discuss in this lesson? All these stock control techniques, right? Setting of variation levels, then economic order quantity, ABC analysis, then just-in-time, VED analysis, SDE and FSN analysis. Okay, so now we finished the lesson summarizing and the seminar for the lesson stock controls. Next, we will discuss about the other costing techniques that we learned. We learned a few costing techniques, right? What are those? We learned about batch costing, job costing, and process costing. So in this seminar, we will discuss about batch costing. So let me discuss about that and let you all know what kinds of questions and what kinds of theory will be tested. So in this lesson also, we will discuss what batch costing is and bit of theoretical aspects, and then we will do some exercises. So today, let's move on with the lesson. So what exactly is batch costing? The name itself actually suggests what it is, right? Type of specific order costing. So there will be a batch producing there, right? So read this slide and check whether you understand it. So what does it say? Hmm? Type of specific order costing. Production consists of a definite number of goods. So um, we know how much we are going to produce, right? So here the production will incur in a batch, right? Rather than a single unit, right? So far we learned in calculating the cost of single units, etc. Because the production is happening in single items. But rather than that, here the production will occur as a batch. Normally, this method is actually used by the companies that manufacture or produce goods in batches, right? So the production process is normally divided into batches, and the costs incurred during the production for each batch are reported. Okay, so that is how we calculate the cost of these batches. Items manufactured are held for stock and sold on demand. So here, the items that are manufactured are held for stock and sold on demand. So read these examples and try whether you can have some examples on your own. So here it is given that shoe industry, toy manufacturing industry, then pen industry likewise. Just try to come up with a few examples on your own. Okay. Then batch costing procedure. So what is the procedure that we have to follow if we are uh, doing batch costing, if we are counting, if we are following batch costing? Just read it. Read this slide properly. A batch is the unit of cost in batch costing. So here, if you are keeping accounts for unit, that means the batch, right? A batch is the unit of cost in batch costing. Second point, costing procedure is the same as that of job costing. Okay, costing procedure is bit similar to job costing. Each similar batch is given a batch order number. The total of batch cost can be ascertained by totaling each order number. That means the total of batch cost can be ascertained by totaling each order number. So we will separately have order numbers. So the total of the batch cost can be ascertained by taking the total of these order numbers, right? So by order number means how many times you order. Let's say per batch, you produce 100 units, okay? Then per year, how many times you need to order if you are supposed to have 500 units? Then you need to order in 5 times. You have to order 5 times if a total batch is 100 units. That is what you call the order number. To find out the order number, what you can usually do is you can divide the total production per year or the total demand maybe per year by the number of units that are produced in one batch. Then you know how many times you need to order this, the order number. Okay. The cost of production per unit can be ascertained by dividing the total costs by total batch quantity. So we will do some exercises, then you will understand properly. Just read this again. The last point is very important. Read it. Okay, so that means the cost of production per unit can be ascertained by dividing the total cost by the total batch quantity, right? So now we are ascertaining the total costs for the batch, no? Therefore, we need to divide it by the number of units that we produce per batch. Okay, you will understand that when we are discussing the questions. Let me share the questions with you all. So we will do the first question. Okay. So remember, if there are remaining questions, yeah, there will there be remaining questions? I'm not sure if there are remaining questions in other lessons also. Try those by yourselves, okay? I'm discussing everything that I can with the time. Then other things you have to try by yourself. If not, you will not understand anything. Okay. And I will try to cover a few questions that are in the question queues during the seminar time. Okay. Batch costing procedure. Leo Limited undertakes to supply units of a component per month for the months of January, February, and March 2020. Every month, a batch order is opened against which materials and labor costs are booked at actual. Overheads are levied at a rate per labor hour. The selling price is contracted at 15 rupees per unit. From the following data, present the statement of cost and cost per unit. So you have been given the total profit per unit of each batch order. Okay. Now just read the question again until I open the Excel sheet to do this question. Okay. So you all can get the pen and paper and do this question with me. Right? Please do these questions again and again. Then it will be a good practice to you all. Okay. So like I said, I have copy pasted the question here. Then it is easy for me. So let me take the values that are given in this question to this Excel. Okay. So here they have given the mark. Batch output, material, labor cost. So months are January 2020, then February 2020, March 2020, right? Fill in the batch outputs. Batch out will be 1250, 1500 in February, 1000 in March. Material cost, this will be in rupees, okay? Material cost, 6250, then 7500, 5000. Labor cost, 2500, 3000, 2000. Right. They say that the labor is paid at the rate of 2 rupees per hour. Okay, so the other details are given. So here also we have month. Then overheads, of course, we want overheads to calculate the cost. Total labor hours. Because in the question it says overheads are levied at the, see, in red color, rate per labor hours. Therefore, including these labor hours here is important. So let's include this January. March. Overheads will be 12,000, 9,000, 15,000. Total labor hours, 4,000, 3,000, 5,000. So according to the question, what are you supposed to prepare now? Hmm? What, what is the requirement? What is the requirement? You are supposed to present the statement of cost. Then you are supposed to find the cost per unit, total profit and profit per unit of each batch order. Clear? Now read the question again. I will share the question because reading and understanding that question is very important. Let me find the question. Okay. Now I open the question. Please read question 1. Read it again and understand what you are supposed to find and what are the details that are given here. Okay. Separately identify those. Okay, now I hope you all understood the question. Let me take the Excel. Okay, now we'll work on first we have to work on the statement of cost, right? Let's prepare the statement of cost. So we will have this for January, February, because monthly we have to find. Then March, we'll have a total value here. Okay, first let's get the batch output, right? See, batch output numbers. We will input the data that are given here, which is required to do the calculation. In January, that is 1,250. February, 1,500. March, right? Then they have given us the details about materials, right? So now tell me, how do we find the total cost normally? We take the summation of the material cost, labor cost, and overheads, right? That is what we discussed. So now let's input data, material, labor, and overhead costs. Then that will be helpful in the calculation of total costs. Okay. Material, 1,250. Then in February, 7,500. March, 5,000, right? So these details are given. Then labor. Labor costs, they are also given here, right? Material cost given. Labor cost is also given in January, 2,500. February, 3,000. March, 2,000. Then we have overheads, right? Overheads, how much? It's given here, right? But can we put that value there? Can we put that value there? No, right? We need to take the value that is relevant to this batch. In January, 1,250. In February, 1,500. Right? So total overheads are given. So some overheads may not be related to this. Therefore, let's find the absorption rate. How are we finding the absorption? How are we finding the absorption rate? First, we need to find the absorption rate. So to find the absorption rate, we need to divide the total overhead value by the total labor hours. Why do we need to do that? Because in the question it says overheads are divided at a rate per labor hour. Okay, so they are considering labor hours. So we need to find the absorption rate. So in February also find the absorption rates. You all can do that. Take the total overhead, divide it by total labor hours. Again, for March, total overheads divided by total labor hours, right? So now we know the absorption rate per unit, right? Therefore, let's take the absorption rate for January into the batch output. Then you will receive the overheads that are overhead cost that is relevant to this batch. Again, February multiplied by the batch output. March also multiplied by batch output. Okay, so these are the overhead costs. Now, since we are supposed to do the statement of cost. So now this is the statement of cost, right? Now we are finding out the statement of cost. So how do we get the total cost now? So before finding the total cost here, let's find out the totals, right? So in this batch, how much? We'll take the summation, okay? You need to add first January, then February, March, batch output, right? Then press enter. Likewise, find the total material cost. Since I'm using Excel, I will be using the equations formulas like this. For you, you have to add one by one, okay? Equal mark, or we can get the total sum. Let's take take the summation of total overheads, right? So now we added the values. Now let's find out the total cost. How do you find out the total cost? I told you we need to take the summation of material cost, labor cost, and overhead costs, right? Therefore, we can just take the addition of these three values, right? Take the addition of material cost, labor, and overheads. That will be 12,500. Again, I will use the formula. Take your calculator and add these three values. Okay, for February, 15,000. For March, how much? Material, labor, overheads. That will be 10,000. Right? So here also let's find out that total for all these 3 months will be 37,500. Okay. Now, so this is the statement of cost. We found the total cost for each month as well as the total cost for all these 3 months. Okay, now next second part, cost per unit. So you are supposed to find out the cost per unit, right? So how are you going to find out the cost per unit? You need to take the total cost. Remember that was in the tute, okay? You have to divide the total cost by the number of units that is in the batch. Okay, again, equal mark. Now you have to get the total cost 15,000 divided by number of units that are in the batch. Okay, again for month of March, total cost divided by number of units that are in this batch output. Okay. Okay, now let's find out the cost per unit. So what is the cost per unit? Total cost divided by batch output. That is how we found, right? Total cost we got material cost plus labor cost plus overhead cost. Cost per unit, we took the total cost and divided it by the batch output, right? Now we found the statement of, we did the statement of cost. Next we did the cost per unit. Now properly refer to this from beginning, this bit, and see whether you understood. Redo it again and see whether you got the idea what exactly we did there. Okay, then shall we move on with the next part of the question? So here we are supposed to find out the total profit and profit per unit of each batch order. So now just think, for us to find the profit, total profit, what do we need? What are the elements that we need to calculate the profit? We need income and then expenses, right? So far in our cost sheet, cost statement, we found out the expenses, right? So now we have the expenses. We just need to find out the income, right? So how do we find out the income in this question? Income would be sales, right? So how do we find out the income from sales or sales income? What have they given here? The selling price is contracted at 15 per unit. Per unit, selling price will be 15. So let's find out the value of total sales. That means 15 times number of units in the batch, right? 1250. Then again, 15 times for February, 1500. That will be 22,500. March, 15 times 1000, right? March, they only produced 1000 units. So here I forgot to actually get the total, cost per unit by using the total costs. So we can take that as well. Equal mark, take the total costs and divide by the total batch output. Okay. Then here also sales, you can take the summation of all these sales for these 3 months, 56,250. Okay. Now, how are we going to find out the sales? Sorry, profit. We're supposed to find out the profit, right? We found the sales profit. We take the difference between sales and costs, or let's say total cost, since we found the total cost here. Total cost. So let's take it. So we have sales for January minus total cost 12,500. Okay. Now again, we have sales for February 22,500 minus total cost 7,500. Again, for March, you have sales worth of 15,000. That means income 15,000 minus total cost will be 10,000. Right now, let's find out the profit, total profit for all these 3 months. That will be 18,750. Okay, the summation of these three. We can take the summation of these three, or we can take total sales and divide it by total cost. Okay, better to take it like this, since we have total values, then you can cross-check with all the numbers. What is the next requirement? Profit per unit of each batch order. Now we need to find out the profit per unit. How are you going to find the profit per unit? You take the profit and divide it by the batch out, right? You take the total profit for each month and divide it by the batch output. So we have the profit for January divided by the batch output 1250. So profit per unit will be 5 rupees. Again, in February, we have 7,500 profit divided by batch output 1,500. Again, profit per unit will be 5 rupees. Same thing, repeat for March, 5,000. Batch output is 1,000, right? So now you have the profit per unit as 5 rupees per unit. Okay, so now we have prepared the cost statement of cost. We found out the cost per unit. We found out the total profit, then profit per unit. Clear? Let's take it from the total value as well. Divide it. You will get 5 rupees here as well. Okay, now redo these questions again. Okay, hope you all understood the discussion of question number 1. So let's move on to question number 2. Okay. Now read out this question. Component SW10X is made entirely in machine shop. Number ASW2. Material cost is 20 rupees per component. Each component takes 6 minutes to produce, and the machine operator is paid 15 rupees per hour. Machine hour rate is 72 rupees per hour. The setting up of the machine to produce the equipment takes 3 hours for the operator. You are required to prepare cost sheets showing the setting up costs and production costs, both in total for batch and per component, assuming the batch size of 300 component, 150 and 200. Right? So batch size will be this. So per batch, at first scenario, it will have 100 components. Second scenario per batch, 150. And third scenario, 200. So read this question again until I open the Excel sheet and try to understand what are the details that are given here. What does it say? Material cost is 20 per component. So material cost is given per component. Okay, each component takes 6 minutes to produce, and the machine operator is paid 15 per hour. So it takes 6 minutes per each component, and the machine operator is paid per hour rate. Okay, so what do we need to do normally? So we will do this in the discussion. We need to convert the total hours. We need to find out the total hours taken to produce these components. Machine hour rate is 72 per hour, right? So we have machine hour rates, then machine operator salary, then materials, right? Setting up the machine to produce the equipment takes 3 hours for the operator. Okay, this question may seem a bit tricky, but it's very easy. So we'll discuss, then you will understand properly. Okay, question number 2. I have been, okay. Now we are preparing the structure, okay? Now, see, in here, we have to prepare, we have to find out the answer totally for the batch as well as per component. So for a batch, first scenario, there are 100 units. Second scenario for a batch, 150 units. Third scenario for a batch, you have 200 components. Okay. So now what I did so far was, I'm still building up the structure that we need for the computations. So first I have total cost computation part, then cost per unit. Here again in the second scenario, 150 components, total cost, then cost per unit. The next one, last scenario, when there are 200 components, again you have to find out the total cost and cost per unit, right? Now we are supposed to find out the setting up cost and the production cost, okay? For both total cost and cost per unit, okay? Now let's find out the values. Setting up costs. Right, so what are the setting up costs? Machine expenses. That will be, what do they say? The setting up of the machine to produce the equipment takes 3 hours and the machine hour rate is 72 per hour, right? Therefore, 3 hours, it's 3 hours into 72 rupees. Okay. So that will be how much? 3 times 72. That will be 216. It's the same here, right? 3 into 72. Again, 3 into 72 per batch, no? Right? So it doesn't change the total cost. Right. Then let's find out the cost per unit. So that is the one that differs, okay? Per batch we have incurring this cost, no? 260. Now let's find out the cost per unit, which means if the total cost is 260, there are 100 components. Cost per unit will be 2.16. Again, total cost will be 216. Then there will be 150 components. So the cost per unit will be 1.44. Again, total cost will be 260 divided by number of units, 1.08. Now next, we have to find out machine operator wages. Right? Machine operator wages, what does it say? They say the setting up of the machine to produce equipment takes 3 hours. Then the operator's wage time. Machine operator is paid 15 per hour, right? So 3 hours into 15 rupees per hour. Okay, now let's find out the total cost. 3 times 15, right? It will be 45. Here also, it will be the same, no? Per batch, no? But when we are considering per unit value, you take the total cost again divided by number of components. First scenario, it is 0.45. Here also 45 divided by 150 units components. Here also 45 divided by 200 components, that will be 0.23. So the total cost value won't change per batch, but since the batch components differ, the per unit value will differ. Next one. Production costs. Now, how are we going to find the production costs here? So first, something direct that we can find out is what? Material cost. Material cost is 20 rupees per component. So let's find out the material cost. So per each component, how much? 20. Therefore, the cost per unit will be 20. Here it will be the same value. But the total cost, since it depends on the number of components, setting up cost did not depend on the number of components, number of units. Normally, machines work consistently, right? Maybe per batch here, according to this question, not per unit wise. Okay, per batch it is working. That's why the batch cost did not differ. But when considering the production cost, per unit cost may be similar, but total cost differs. Okay, 20 into, first we produce 100 components. Then second scenario is 20 into, we need 150 components. Per unit, per component price is given. So again, 20 into 200 components. Okay, now we found the material cost. Now we need to find out the machine operator's wages. Therefore, we need to do some workings here. Have a separate page or separate side in your paper for the workings. Okay, so we have 100 units, 150 units, then 200 units. What does it say in the question? Each component takes 6 minutes to produce, right? Each component. Therefore, 6 minutes into number of components. That is how we can find out the time consumed by this whole batch, right? Time consumed by this whole batch, which have 100 component, will be 600. Again, 6 minutes into 150. Thirdly, again, 6 minutes into 200. 1200. Now we got the answer in minutes. But machine operator's wages are given. Machine operator is paid 15 per hour. Right? 15 per hour. Hourly rate is given here. Get it? Now try to convert these minutes into hours. Try that by yourself. You need to have this knowledge. These are basic mathematics. right? So how are you going to convert these minutes into hours? Divide this by 60, right? Per hour, there are 60 minutes. So if we are converting these minutes into hours, we need to divide it by 60 minutes. So once you divide these total minutes by 60 minutes, you get the hours that are required for these components, right? So totally 400 components, it will require 10 hours. Okay? It will require 10 hours. Totally 450 components, it will require 15 hours. So what we did was, since we got the values in minutes, we converted it into hours by dividing minutes by 60 minutes. Total minutes by 60 minutes, then you get the hourly rate. Then let's calculate the machine operators' wages. So we know per hour rate will be 15. That will be into number of hours, right? 15 into number of hours. So equal mark number of hours 10 into 15. Again here equal mark 15 into 15, right? 15 rupees paid and 15 hours taken. Again 15 into number of hours 20. So this will be the machine operators' wages. Clear? Now let's go. So these are workings. Let's go back to our sheet. So we found machine operators' wages, 400 components, 150, 450 components, 225. For 200 components, it will be 300. Now find out the cost per unit. How do you find the cost per unit? Divide this by total cost by number of components, right? Again, divide the total wages paid by number of components. Next, divide this by number of components. You get the per unit value. Clear? Then machine expenses. Sorry, okay. Machine expenses. Now, what do they say for machine expenses? Let's go back to our question. Again, we are paying 15, right? Sorry, not 15. 15 is the operator's wage. So wages, we did the computation. Machine hour rate is 72 per hour, right? Which means 72 times, if there are, that is 100 components, how many hours? We calculated hours in our workings, 10 hours, right? Again, 72 hours. They say per machine rate will be 72, 15 hours. Then when there are 200 components, 72 into 20 hours. Clear? We got this machine expenses by multiplying our machine hour rate by the number of hours required to produce 100 components. Required to produce 150 components likewise. So let's find out the cost per unit. It's given, right? 7.2 was given there. But again, here also you can find the question. Okay, 150 divided by 200. 7.2 was it given? No, it's not given, right? So we have to find out it anyway, right? Only 72 rupees per hour was given. So we found out the total machine expense, right? By multiplying per hour rate into number of hours required to complete this batch. Then we found out the per unit cost, right? So in this question, what we did was we calculated, we prepared the cost sheet showing the setting up cost and production costs, right? In both total cost and per unit cost. So we assumed 3 batch sizes. First batch had 100 components. Second batch had 150 components. Third batch had 300 components. So we've prepared the cost sheet here. This is our second question. So in the first question, we prepared the statement of cost. We found out the cost per unit, total profit, and profit per unit for different months, right? For different months, they consisted different batch outputs, batch quantity, right? So what do you mean by this economic batch quantity? So a term similar to this we have learned, which is economic order quantity, right? So this is economic batch quantity, but these two terms are different, okay? Just read these steps, then you will understand. Read these steps. Read what this EBQ is. So what do you mean by this? Economic batch quantity, measure used to determine the quantity of units that can be produced at minimum average costs in a given batch or production run. That is why it's called economic, right? So now we are deciding the batch quantity, but the economic batch quantity, which means that can be produced at minimum average cost. Okay. To determine EBQ, costs may be grouped into setting up costs and carrying costs. So remember, to determine EBQ, costs may be grouped into setting up costs and carrying costs. Okay. So carrying cost, of course, we can consider as holding cost as well. Setting up costs are fixed per batch. Unit cost falls with the increase in batch size. Remember, so normally setting up cost is fixed for the batch. It doesn't change depending on the components in the batch. I hope you remember the question that we did previously under batch costing. There, go and check the setting up costs per batch. Did not change. It was the same. It did not depend on the components per batch. Okay, so per unit, if you are dividing, then it might differ, but per batch setting up cost was fixed. Carrying cost involves the cost of holding a large stock, right? Carrying cost involves the cost of holding large stock. So normally what happens is, so this carrying cost might be given to you directly in questions, right? But setting up costs, can you remember the last questions we did? You did some calculations, right, to find the setup cost. Maybe the machine operator's wages, maybe regarding the machine operating expenses. Likewise, you might need to do some calculations to find out the setting up cost. Now, I have a question. Now, you all try to find the differences between EOQ and EBQ. So we did study another term called EOQ, right? Economic order quantity, right? So try to find differences between these two, EOQ and EBQ. There is one major difference that we need to discuss. Just try to find that. Read these definitions and try to find. You can read the definition of EOQ as well. EBQ. Now try to find what this difference is. What are the differences? In EOQ, what did we do? EOQ, we used to calculate the optimum size, right? Economic order quantity is used to calculate the optimum size. When goods, parts, or finished goods have to be delivered to an external supplier. Right, so let's write this. In EOQ, we calculate the optimum size when we place an order for maybe materials, finished goods, etc. from a third party. Clear? Then EBQ that we learned just now. What happened? EBQ is used to find out the batch size for a production run in a simple term, okay? Batch size, shall we say, which can be produced at minimum average cost. Clear? So EOQ is used to calculate the optimum size when we place an order for maybe materials, finished goods, etc. from a third party. But EPQ, that is internal, used to find out the batch size, which can be produced at a minimum average cost for a production run. That is internal. We are doing the production internally, and now we are deciding on the batch quantity that we need to produce. Is it clear? So understanding these two terms separately is very important. Okay. So read this slide again and take the notes if you want. And you may Google these and find some more details on this. That is all right. Try to take the note and understand this again. Read this. So in EBQ, we need to determine setting up costs and carrying costs, because costs may be grouped into setting up costs and carrying costs, right? So there are two types of costs when we are deciding on economic batch quantity. Clear? Shall we move on then? Right. So this is the equation that we can use to calculate EBQ, economic batch quantity. Now refer this, because now previously we learned how to calculate EOQ with similar equations, but we are taking setting up costs, right? Just check. So first we multiply the annual demand and setting up cost by 2, right? 2 into annual demand into setting up cost. Then we divide this whole thing by cost of holding 1 unit of inventory. We divide this whole thing by cost of holding 1 unit of inventory. Clear? So you have to remember this equation, this formula, which is very important. So that is the end of seminar 2, where we discussed EOQ, economic order quantity calculations from stock order or stock control lesson. Then we discussed about process costing. We did some theoretical discussion as well as some questions regarding to process order costing, where the process order procedure can be shown clearly. Then we discussed theoretical aspect, we discussed the comparison of economic order quantity as well as economic batch quantity. So that is the end of seminar series 1. Seminar series 2. Thank you very much, everyone. So we will discuss further on other lessons in seminar series 3, which will be our final seminar for this lesson, Cost and Management Accounting. Thank you very much.